It takes us to our talk of the tape. Is this still a stay-the-course bull market about to take its next leg higher? Let's ask our panel. Liz Young is SoFi's head of market strategy. A.J. Oden, an investment strategist with JPMorgans Private Bank. You see both are here at Post 9. Welcome back, everybody. All right, Liz. I mean, here we are, like 9-10 points away from a new high. But I read here that you say if we take out all-time highs, a new pullback begins. I thought it would confirm the fact that we've been able to rally back so sharply and set us up for what's ahead.
So let me clarify. When we hit 5,200 and crossed over, I felt like momentum would continue in that direction. Momentum is still very much intact. We're above the 50-day, the 100-day, the 200-day. We've taken out all the technical retracement levels. We're at about 86% retracement. So we are right on the cusp of hitting that all-time high. The intraday high, I think, is a little bit higher, about 52.63. So to take that out, then I think we struggle there for a while. I don't see another leg beyond that that's meaningful unless we get some kind of really cool CPI tomorrow and cuts get pulled forward.
Is that what this is about right now? You know, again, today's initial read, people said, oh, my gosh, it's hotter than expected. But then you saw the revisions lower. And even the Fed chair, who is speaking live today over in Europe, wouldn't call it hot. He called it mixed.
Yeah, well, I mean, as a surprise to absolutely no one, Powell said rates are going to stay higher for longer. The other thing that he did say today was that basically they don't see GDP staying below trend anymore. So maybe seeing growth getting a little bit stronger. If CPI stays exactly where it is for the second quarter and GDP actually heats up, so we were at 1.6 for the first quarter, if it gets hotter again, there's no reason for them to cut. And the market has been okay with that so far. So right now, I don't think there's also any reason for the market to pull back in a meaningful fashion. But if we surpass those all-time highs without really any good news to take us into the next leg upward and without an earnings season that's going to start anew yet, there's not that much support fundamentally to take it, let's say, another 5 or 10% beyond that in this moment.
Let's debate that. AJ, what do you think?
Well, I think I'd have to agree with Liz to a certain extent just because of the fact that I think we're getting away from the double dutch of how many cuts we're going to have. And the market just believes the next move is a cut. And so we're in a better place than we were last year.
The market's correct, isn't it? The market believes that the next move is a cut.
Yes. And I believe that's where we're headed from here. And so as much as maybe, you know, whether or not we need to have a cut, that we could debate on. But I think as long as we still believe the next move is a cut is what's important right now.
But I mean, to Liz's point, the economy, let's say, okay, forget 1.6%. Let's say the economy is stronger than that. Aren't we talking about the definition of a soft landing, that the CPI is, you know, let's say the CPI tomorrow comes in how we'd like it to come in and growth, you know, picks up a little bit. Isn't that what a soft landing looks like?
In a sense, I think that's what we all want. We want CPI to come in, you know, right in expectations, because then it tells us that first quarter of this year was a blip on the radar. And so as long as we're making it towards that 2% mark, yeah, if we don't get a cut this year and we get it next year, as long as we're still heading in the direction and the next move isn't a hike, I think that's what's most important. And that is a soft landing.
But I mean, I'm going like even the Fed chair, Liz, today is like, he says, well, and, you know, a year ago and core was, you know, 7 point whatever. And now it's 2.7. I mean, they're sort of dropping all the messages that they want to cut. They're just waiting, and they just don't feel the need to do it now. And that's great, because why should they do it now?
Well, I mean, it's good in the sense that this pause period is usually pretty good for the market. So nobody should really be clamoring for cuts, because that's typically what gives the market a problem. There is no reason for them to do it now. And absolutely, we've made progress. Coming down from 7% or coming down from 9% CPI is definitely progress. But in my book, a soft landing includes getting back to target, or at least getting much closer to target. And their particular metric is not the one that makes the most headlines. We talk about CPI more often, which still, even this week, is expected to come in at 3.6% for core, which is just too high. And it is taking a bite. We're seeing consumers change their preferences. We're seeing trading down again. And we've seen this before in this cycle, and consumers have come back. But we're seeing it again, and now at a time when you also see delinquencies ticking up. So we're starting to teeter on that edge of soft landing not looking quite as soft anymore if we continue at this clip.